What is up, my peeps? Joshua Smith here at GSD Mode Studios, where every week I share new top real estate agent and entrepreneur interviews, along with tips that I'm personally doing inside my business that have allowed me to become one of the top real estate agents and team leaders on the planet. Check us out at gsdmode.com, where you can see more free, great content, tips, interviews, resources, trainings, and more that will help you massively grow your real estate business. Also, make sure to check out my personal mentorship coaching program at 90daymastery.com. This is for those of you wanting to create a truly successful real estate business that pays you the money you want, as well as gives you the time and freedom to live a life worth living. This is hands down the best, most effective, and most affordable real estate coaching program that exists out there. Thank you so much for all of your support. Now, let's dive on into today's content. What is up, my peeps? Joshua Smith here with another GSD Mode Podcast interview where every single week I interview top entrepreneurs, top real estate professionals, and straight up top badasses that they're dominating their spaces. They're people choosing to not live a life of mediocrity, but instead to go out there and create big, amazing, epic lives for themselves and their families, as well as have a big impact on others. And today, guys, got another rock star, amazing, epic guest on the show. So our guest today is actually a dude in my own backyard, man, out here in Phoenix, Arizona. Operates one of the top real estate brokerages, or maybe even the top real estate brokerage in Phoenix Metro. And also has his own iBuyer home buying firm program, as well as a private equity fund, along other things that this dude is up to and just out there massively kicking ass. So really stoked and honored to have Bob Collopy on the show, my friend.
Hey, thanks. Looking forward to it. Excited to be here.
Yeah, no, it's going to be a lot of fun, man. I appreciate you. I know you're traveling right now. You're in D.C. right now. So I appreciate you making this happen even while you're traveling, man. And yeah, stoked to have you on, dude. And man, you're up to so many big things. You know, you got a really successful real estate company. But then, and look, those that aren't in Phoenix, they may not know, I guess, the magnitude of how our market operates with all the iBuyers and all the, I mean, we're the proving grounds in the sandbox for everybody, you know, right? Zillow started here and with their iBuyer program, Open Door, and you know, you've done just a phenomenal job at being able to combat, not necessarily combat them, but give the consumer what they want, but still grow your company through that and everything that you're doing. So excited to dive into all that, dude. But before we do that, man, I'm just always intrigued in our guest journeys that led them to where they, like, what led you to real estate and on this journey in the first place? Around the clocks, like, how did all this, like, why real estate and how did this happen?
Yeah, so basically, like, I started real simple. I started as a handyman, and I was actually in middle school when I started because my dad and my mom had a very small property management company with a couple people in it, and I would help with the turnovers. I'd, like, rip out carpet, I'd touch up the paint. Eventually, when we were in Tucson, they have, in Phoenix and Tucson, they got evap coolers, so swamp coolers. And I'd have to go up and fix those, and that's how I started for many years up through college, and that's how I helped pay for things. I'd work all summer, and that would get me through, summer and fall and spring. And I did that for a few years. I really learned the nuts and bolts of, like, how these properties actually stay together, how they stay up, and how they work. And then I got my real estate license in college. And I was like, all right, I want to do something a little different. And I went into commercial office. And this was actually really difficult for me because people in commercial office are like the kings of charisma. Like, these guys are really good. Like, they make friends in, like, seconds at a networking event. They get that deep bump and, like, all this stuff. And I was the absolute anti of this. Like, all this stuff I've learned to even talk to you is completely learned because I was like the goober in the back. Like, if we went to a networking event, and I still do this, if most networking events are like 3 hours long, I'd spend accumulatively like an hour in the bathroom just hiding from people because I'm actually an introvert. Like, because I have to get myself up and ready. I got to know, like, what I'm going to do, what's the goal, what's the mission, and then I go there. I can't just, like, be like that. But, like, the reason why I'm saying this is that really grew my character in college, and it really got me to come out of my shell because the other big issue that's just happens to everyone in real estate who starts at my age, because I wasn't even 20. I was like 19 or something when I started actually trying to go out there with a license and talking to people, is you're young. And generally this is seen as a gray hair industry. You got to have a few gray hairs up here to be seen as credible for whatever reason. That's just kind of what happened. And so like that made it even more difficult of me being this young guy talking to the older people, the more experienced people, and just really getting used to different ways of talking to people, how they think, and really being able to like withstand rejection over and over and over and over again. Because you're not going to get rejected more than if you're cold calling 70 people a day and then spending the other half of your day literally walking into an office and saying, hey, you want to re-up your lease or something? And then getting chased out by the building owner. So I went from there, and then I was like, this isn't going to work for me. And I was like, what am I going to do? I'm about to graduate college, and should I go into tech? Should I go into this? Should I go into that? And I got good offers over in Silicon Valley because I was more of a tech guy. And I was like, all right, those are all pretty cool jobs, but like, I don't want to get hampered down by anyone. Because I also discovered that I wasn't really good at working for people. Like I would grind and I'd do it and I hated it, but I would do it whenever I felt like it was like my decision to do it and I could do it in my way. I was like, okay, that's true. I like how I operate and I learned from that. These are my strengths and weaknesses. And I was like, all right, okay, I'm clearly not the guy who can hammer phones all day like most people in real estate. So what makes me special? What makes me different? What will make it to where I can go? So what I did is I went up to my parents, who still had a small company, and I was like, look, I can market this. I can get us to the front page of Google. I can get us in front of everyone, and I can do it for like nothing because there was no budget. My budget was maybe $500 total. And I was like, all right, I can take that $500 and I can get us on the front page of Google, and that's going to change everything. And I can get us on the front page of Google Local. And basically I did. I'd do backlinks. I would do content. I would do this. I'd do all this other crazy stuff. And we got there, and it made a huge difference. And so that grew a lot. But the thing is, I was always doing multiple things at once, because the other thing I understood is like, I have a different approach to real estate, which is I don't specialize in anything. I actually do a lot of things at once, because I actually see real estate as more of an assembly line. So like you want to like a lot of people will just think of the sales. And to me, that's just the first part in the assembly line, especially for investors, because I have an investor focus. And so the first part is the acquisition. You got to underwrite it. You got to do this, you got to do that. But then after that, generally people want to rent it up. But to do that, you got to rehab it. You got to get it at the highest dollar you can and make sure it'll be good over 5 years. So that's the next step in the conveyor belt, the rehab. And then you got to lease it up, and then you got to manage it, and then you got to maintain it, and then you got to sell it. You got to do this whole conveyor belt of things. And I was like, well, why don't I just be there for them at any given point and just like hang on to the clients I have? Because I'm not good at picking up the phone, getting a new client every day. Why don't I maximize every client and really learn every part of the deal so I can maximize my value to them and actually change what I'm able to offer them, because I'm so essentially good at every single thing. I can offer like a total package, if you will, that other people just can't do, because one, they haven't built the systems for it. They don't understand it. And they don't think like that. And I was like, well, I want to put myself in the same shoes as investors and be with them every step of the way. And so I kept building that up more and more. And I actually started with multifamily. Multifamily was huge, 2012 to still now. It's still crazy hot. And it never really slowed down. And so I was like, okay, I'm going to be with you every step of the way on multifamily deals. And so how am I going to do that? How am I going to get in on this? So what I did, I was like, well, I got to buy one. If I'm truly going to understand an investor, I got to become an investor. The problem was I had no money. I had nothing. I couldn't make my Jimmy John's payments, man. Like it was rough.
How old were you at this point? Like 22?
Yeah, I was like 22, and I owned the only thing I owned was a mattress, and that was it. And I was like, oh, but I wanted to buy an apartment complex now. So kind of a there's a gap there, isn't there? There's no money. So I was like, well, I've started learning all these things. I'm already a handyman. I've been working on the sales. I'm willing to grind. I know a decent amount of property management from helping, grow this management company and everything. I was like, all right, I need to find and network with people as someone who can be like an account manager. So what I need to do is I need to syndicate a deal, and I need to position myself in this deal as the account manager because I have no money. And essentially, I'm going to put in all the sweat equity. And this is what I would tell people. So I'd go to these networking events, which I hated, but I went every single day for 6 months, essentially face your fears. And after 6 months, I found a guy who was really good at the stuff I wasn't good at. So he had complementing skill sets and he had experience. This guy had been around the block. His name was Lane, and he was really great to find because he was really great at taxes. He's really great at accounting, and he was really good at putting together the legal paperwork of partnership agreements, especially with people in other states. Because I was like, well, who needs me the most? What kind of investor needs me the most? Well, because I can only do the stuff on the ground, it's got to be people who can't be on the ground at all. Well, one thing with Arizona is most investors, or almost everyone in Phoenix, isn't really from there. And a lot of the investors are from California because they're trying to get better rates of returns because California can't even keep up with inflation most of the time. And so they're all in California, and that's where he was based. And he's like, look, I'll go find the money, and I'll handle the accounting, the taxes, and the partnership agreements, and I'll teach you all of it. But you have to go out, and you got to find the deals. You got to underwrite the deals. You got to broker the deal, negotiate the deal. And then you got to do all that other stuff, rehab, lease up, manage, everything. I was like, okay, I'm going to do that. And I'll get a piece of the equity. And so this took a long time to find a deal because he's like, all right, I found someone with $50,000. So it wasn't going to be a huge deal. But I was like, fine, it won't be a huge deal, but I'm going to get experience. I'm going to understand everything. I'm going to build this machine from here with all this experience. And so I'm looking around for 3-4 months. I'm not finding anything because it's tough to find good returns on multifamily nowadays. But I found one. The caveat is it was in one of the worst parts of town, and it was the worst building in one of the worst parts of town. And no one really believed in it. And I was like, and this includes the financing, because financing is a big deal, as anyone knows, especially in investment real estate, because it's not 5% down. It's more like 20, 25, depending on what kind of loan you're trying to get. And I didn't want to do hard money because it's really hard to make hard money loans work on those margins if you're trying to do a couple year hold. And that is what this is going to take in multifamily. So basically I went out there and I found it, and we finally brokered it and everything, because I knew by looking at the area, it wasn't that bad. There was actually this fringe area that had a lot of good voucher programs, a lot of good families, and they were like the hardworking people who didn't have the income to do better, but they weren't like the do-badders. They were the do-gooders. So I was like, I can actually get good quality people here if we just change everything about it. So essentially, okay, how did I get the financing? That's a big question a lot of people have. So I went everywhere. Couldn't get anyone to do it. They didn't like the area. It was too scary, this, that, the other. And I was like, all right, what I'm going to do is I'm going to go to a local bank then, because they have, I always forget the exact name, but they have to give a percentage of the loans to the community. And I was like, I have a feeling they haven't like reached their target yet. And so they really need someone like me who's super local and is helping in a bad area. You know, that's a good tagline. And also I've got this partner. So they were like, all right, fine, we'll do it. We actually got a really good loan on it, good rate. But we had to do personal guarantee. So I had to strap myself down to this thing and have the other guy do it because I wasn't worth enough for the personal guarantee. And so I was like, okay, we're going to do it. So, okay, we got it. We got the financing. It was a good deal, good loan, everything. Now I just have to deal with this apartment complex that I now bought. The complex was 3 duplexes and a house. So 7 units, and I got it for, it was listed at $210,000, which is already decent, but I got them down to $172,000. So a lot of bang for your buck actually per door. And of the duplexes, 5 of the 6 units were a 1-bedroom and 1 was a studio, and the house was a 3-bedroom, 1-bath. And I was like, all right, here's what I'm going to do. There's 4 people living in the 7 units right now. I'm just going to go and fix up the other 3 and bump the rents up a lot because they were like nothing then because they were completely dumped. And then we'll see about those other people later, see if we want to upgrade them, move them to the upgraded units, improve. Like, hey, I know you're paying they were paying like $300-400 a month. It was super low. I was like, but I wanted it at $550. I was like, well, if you want to move, you can see the unit, $550, or I bring someone else in. But eventually, I might have to boot you out because I'm going to $550. I let everyone know, which was a pro and a con to that. But here's the thing. Here's a little tidbit for people who haven't done this, is because the escrow was so long and the owner didn't care, they stopped collecting rents on the people who just weren't paying rent. They didn't kick them out to make the numbers still look good. So when I bought it, day one, I was down to 3 tenants instead of like 4, maybe 5. One guy was iffy. So now I'm down to 3 tenants and we're bleeding money every month. And so now we're going to do the rehab. We're like, oh my gosh, this is worse. So we need to do the rehab now. So we go in, we start fixing this duplex. And to give you an idea of how bad this duplex was, one guy, he was kind of new. He hadn't done a lot of rehabs yet. He went in there, took one look at the place, turned around and lost his lunch. The place was messed up. And we had to bug bomb it 3 times as well to get rid of all the issues. But essentially, I went in there. I got 2 guys to help me with the rehabs. I went in myself, and we did basic stuff. We did basic flooring. We did basic paint, cabinetry. We kept it as simple as we could. We moved in people. And we actually, because we made such a big movements around the area because no one had seen it, we had people leasing them out before we were even done, which is actually a big thing to notice. Is like what I learned from that, a great tidbit for people, is while you're rehabbing units and you're doing a real concerted effort about that, put up a sign. Hey, we're fixing up units. Take a look. Like, walk up to us, because that's what people do. They'd walk up, they'd see the noise, and be like, oh, wow, we haven't seen anyone try to fix this place up for years. We're like, yeah, you like it? They're like, yeah, we got a thing, a little, voucher program or school or daycare right next to here. We've always wanted this spot, but it was so bad. We're like, yeah. So that's actually nice to do if you're ever doing this. And then, so we'd fill it up. We just kept doing that. And we'd take out the bad tenants. They'd get rough sometimes. And yeah, that was fun. That's a whole nother story. But eventually, we got it done. We stabilized the asset. It took a year or 2, but we sold it. We got in for $172,000. We probably total expenses were around 200 something grand flat, and then we sold it for like 310 or so $1,000. So each one of us walked away with about $50,000 in our pocket, which was pretty great, seeing as we started with 50 grand, and none of it was mine. So that was a really great way that got me into the market, helped me build that program for every single stage, and just keep it going.
Yeah, dude, I mean, what's so impressive about the story and about you at this young age doing this is, so many people look at it of, what am I going to get from this instead of like, whom am I going to become from this experience?
That's
it's like the famous Jim Rohn of it's not about, success in a doing process, becoming process, right? Was this something that was just instilled from you at a young age? Like, how did you have that knowledge at this young of an age? Because I'm guessing with everything that you just went through, I mean, that was probably a year out of your life, right? To walk out with, 50 grand when you had these Silicon Valley job offerings, right? Like a lot of people probably would have bailed from that, like how did you have, I guess, this wisdom at such a young age and knew the becoming process, if you will?
Well, I've always just been really into like personal development. I mean, to an extent, like, yeah, I did watch my parents making money the hard way, because property management is not the easy way to make money in real estate. It is one of the roughest ways to make money in real estate, that and maintenance, which is the focus for them. And just instilling that hard work was one part of it. But also, like, the other thing I saw is, so I got a degree in marketing and a minor in real estate. And I was looking at all these Silicon Valley guys, and I was networking with people in the circles that I did have, with people who were like VPs of like HP, like Hewlett Packard, and all these groups. And they were like, yeah, man, I was making 500 grand a year at Hewlett Packard and all this over at Silicon Valley or Manhattan or what have you. And these weren't close friends. They were just people who talked to me once, and because I didn't know anyone. But the consistent thing I got from them all is almost everyone who gets that like really great Silicon Valley job or Manhattan marketing job, all those sexy jobs, are toast in 2 to 7 years. And yeah, they were making 6 figures 2 years in. They're making 150 at least 2 years afterward, if not 250. And then maybe in 5-7 years, they're making like 450. But then they're like done. And then the next young gun takes them out for half or third the price. And they spent their best years building something that's now kicked them out. Yeah. And I mean, I just didn't want to go through that feeling of like losing everything I built for someone else and not really developing myself. I developed myself in a context that I cannot really use. Like, of course you can use your experience, but it's not your company. You're only going to develop yourself maybe 30% and you're giving 70% to them. I was like, no, that's terrible. You should develop yourself and your business and have all of it. So even if, let's say I have a mega client, and I've had a few mega clients, and they're like, we love you, Bob. We're going to do all these deals. And I have. And I'll do tens of millions of dollars with these guys because they're big, big groups. And then one day they're done. They're just done buying, or they're done with this, or they're whatever reason. I don't want my life to be over. I want to still be able to take those things I learned, to take those networks I created, those processes, that personal develop, and then easily apply it to the next thing tomorrow. And that's something that everyone needs to understand right off the bat. Otherwise, there is that chance that you can look back at your life at some age, 40, 50, 60-year-old, and go, well, they took the bulk of it. And I just never wanted to be in that position. And that's why I always pushed to be an entrepreneur, and pushed to have my own business, and pushed to never lose power over my own life and how I make money and support my lifestyle and the people around me.
Yeah, love it. Powerful stuff, man. So then, I'm curious, man, of like, what was the next, now that you have this track record, right, of this proven deal, and you have the processes down, and you got the, some of the becoming process, like, then from there, was it then you onto the next deal, or at that point did you take that track record and start representing other investors? Like, what was it? Because I think that was your original plan, right? Just to get the street cred, so then you knew how to represent your clients.
Right. So basically, you always want to stay flexible in how you position yourself in a deal. A lot of people say, oh, I will only partner with investors, or, oh, I only broker with investors, or I'll only do property management, or I'll only do sales. So basically, and all that is fine. It depends partially on your personality. It's just, that's not what worked for me, and I liked growing things a lot. Like, that's the thing I obsess about. So I was like, all right, I'm going to take this cred of this one deal, and I'm also going to take this cred because I actually grew the property management company a lot. So now the company is actually quite large at this point. Now we have over 1,000, I believe around 1,000 properties that we manage. And a lot of them are now pushing into, we got single family homes, we got multifamily homes, multifamily apartment complexes, and all this stuff. So I got that, because the thing is, I'm not just doing this deal. I'm usually doing 2 or 3 things at once. So I had this deal. I had this property management company that's growing more and more, and I'm helping develop in marketing and also in the processes. And I was a property manager. I took, maybe 10, 15 properties and managed them, so I'd learn it and deal with that kind of life. And I took on the worst ones, so they were like 10 times more work. And I was also growing multifamily brokerage for myself. I was trying to really break into that market in general and be like, yeah, because see, here's the thing. is while I was doing that deal, I was leveraging the fact that I was an investor too. I mean, a lot of salesmen can't say that, especially with apartment complexes. They're like, oh yeah, buy this place. Yeah, I believe in this area. But I'd be like, I believe in this area because I friggin' bought a place. I put a personal guarantee on something that's worth more money I've ever made in my life. I believe in what I'm doing, and I know what I'm doing because I'm going through it. It's not just a pitch that makes you think I know what the rents are. I know what the rents are because I staked my livelihood on it. That's powerful stuff. There's really no pitch that's going to beat me on that because it's just real. And people know that, especially people in investment. I mean, if you have a lot of money, because now I deal with people who have millions of dollars or tens of millions, or even we've hit the B number. They're not dumb. So
Right.
your pitch can only get so cute. So I just kept being as real as I possibly could be. And by pushing myself into places where I could understand them at the best level I could, and then I'd build a system that would improve their life the best I could. So I would do, okay, I've done it myself. Hey, I've scaled property management, so you know I'm good at processes. And hey, I've started doing multifamily deals, and I'm starting to get that going. And also, now we have a lot more property managers, so you can see that I can help scale a company. We can do the maintenance as well, so you can see we're not just a one-trick pony. We've scaled 2 things. So basically, I'm good at scaling stuff that's heavily process-oriented. And so what happened one day is one of the people I helped out, it was a small deal, turns out they worked for a large equity fund. And he was like, we need a broker like you to help us get homes. Now, he actually wasn't very high up on the totem pole, but they had an opening, and he let them know about me. And basically, he just got my resume on the stack. It wasn't any he just got the resume on the stack. And basically, I still had to convert. And basically, I went in, I was like, yeah, I can do all these things, basically everything I just said to you. And they were like, all right, we'll give you a shot. Do a couple deals with us, and we'll see how efficient you really are. And because we're very specific in how we work. And these higher groups, and I was kind of used to that because multifamily, they're a little more specific, but these groups are ultra specific. And you have to do things efficiently. You can't call them 50 times about something because their volume and this and that. So you have to do it right, and you got to do it right the first time. And you got to be efficient. You got to know how to grow something on your own because they do not handhold. And so we did it, and I just focused on that, and I just went completely into it, and I saw it as the biggest opportunity in a single project to grow myself. And I did. And I just worked I was up till 2 a.m., 3 a.m. for the first month every day. I maybe got 4 hours of sleep, and I don't prescribe that as a lifestyle, but that's what I did for 4 to 6 weeks as I grew everything I could for them and just made it work. And they're like, wow, you're actually the fastest broker to ever adapt to us that we've ever seen. I was like, yay. And I was like, I told you, because the biggest thing also of I'd say the mentality is here's the other thing with the difference between a pitch and being as real as you can be and having a different, because it's almost a different focus. And a lot of people maybe don't get that, is you want to be able to do what you say you're going to do. And you got to know through your past experiences what you'll end up doing. Because if someone's listening to this and they're like, oh, I like Bob's basic pitch of do everything and then grow it all and get better at it. But at the end of the day, I really just am happy when I'm talking to people. And fiddling on the computer makes me sad. Maybe that won't work. You got to know what you like to do and then grow your pitch from that. Because if you don't back it up, you'll never get anywhere. It might work the first time, but it won't work the second time. And that's how I was able to leverage it. I was able to back up the basic pitch, the basic mantra, and then I found, I eventually got a client that matched all that up, which apparently is quite true nowadays because the nature of real estate is changing. yeah, we're going to have real estate agents who are really good on the phones and sales for our lifetime for sure. That's not going to die. But like these iBuyers, these real estate equity funds, and these completely different processes with completely different cultures and way they acquire and way they think about things and how they communicate is growing in the market. I think like 11% of all starter homes in America now go to private equity funds in some capacity. Like 11%. And this stuff started in 2012, basically, is when it got big. That's fast growth when you start to look at how many homes there are. And I don't think that's going to stop for a while. But also remember, 11%. We still got 89%. So yeah, so you just got to find what's going to work for you. And luckily that's been my path and how I leveraged it.
Yeah, love it, dude. Now, when you are doing, all these different things at once, because it wasn't like, okay, I'm just going to take on this complex and learn all of that. At the same time, you're growing property management, you're growing the brokerage. That's a lot, and it takes a high capacity. It takes a lot of focus, and I'm sure there's challenges with that. And what advice would you give to those that are taking on simultaneous because it's almost like starting 3 different businesses at the same time?
You're totally right.
Like what advice would you give? And that may be don't do 3 at a time, right? Focus or whatever, but to be able to manage it. Because even at a smaller level, let's just say it's a new real estate agent that's trying to build their residential resale business. Well, it's like, you still there's so many things you got to manage. You got to, your marketing lead gen, your lead follow-up, your appointment conductions, your client nurture, right? Getting the contract closed and your past client. Like there's always multiple focuses that we've got to be on and developing processes out. So I know this would probably be a book that you could write, but what recommendations would you give, if you could break it down to like the most important few things that you do to be able to make that a reality?
So that's the question. And frankly, that is the question that I continue to struggle with every day, because how you stay focused and are able to do this on a spiritual level is it's the daily grind of not just doing a thing, but growing oneself. And that's a different thing. And I mean, one part is the mentality of like, one of my favorite people is Teddy Roosevelt, and he was all about like strenuous life. That's like his big thing. And learning to love that, understanding that it burns, that it's tough, that it's intense. But if you find reasons that intrinsically make you happy and it'll grow you, you gotta have that. Otherwise, everything else I say is just pointless. You really do have to have this. And how you grow that, I mean, there's some basic ways to grow it. One is like, it's emotional intelligence. And a few things that are always going to help you, and this is going to sound like super basic, but basically everything in life is really basic when you break it down. But like the 3 things that help me grow every day is organization. And it's not just in the business, it's in my life. Like if you come to my house, you might think I have like OCD. And I actually don't. I just am really organized. Like this is where this goes, this is where this goes. And it's not because I just want it to be there. It's because it gives me flows that take out all the wasted minutes of my day. Like I make lists of habits, and then I do what's called habit stacking. So like morning routine, almost everyone has this habit. But have you ever written down that habit, broken it down and sped it up and moved things in your house to make that 1 hour thing into 25 minutes? Because I have. And then how do you go from one habit to the next? That's habit stacking. So you don't lose any of your momentum. Actually, a great book for that is Atomic Habits. It's a really great book. And I use that book for habit stacking and all these little things that you can learn. That'll teach you more than what I can tell you. But that's the essential answer for the habits. The other thing is just eating healthy, staying fit, and doing all these things. Now let's get to the actual business side of how do I do this. So you're right. I got three things going on. And three things will always steal your attention. Because if you just sit down in the morning and say, I'm just going to do this, well, you're going to find out that if the other things are in play, that's not really always an option, because business 2 just exploded and business 3 is considering going on fire because it looked at business 2 and it freaked out. And so what you need to do is you need to create times of your day where you talk to other people, and times of your day where you don't talk to other people, unless it's a true emergency. And there usually isn't true emergencies. So like after lunch, I'm generally slower and I can't super grind, but I'm willing to talk to people. So like from 12 to 2, I'm talking to people. I'm dealing with those external problems. But the rest of the day, I'm thinking about business 1. I'm not worrying about business 2, and I'm not worrying about business 3. I'm worried about business 1. And I might be like this for 2-3 days a week. It depends on the project. Now, what's the project? The project is, what lever am I creating? What lever am I creating? I'm creating a system that is so good that when I eventually hire someone for it, it'll be borderline autonomous. So I don't have to worry about that lever anymore. And once I have a person doing that lever, or I improve the lever for an existing person and they go work it, and they make it better and better, and I will go back and I'll have times of the month or quarter where I improve everyone's technology processes and everything. But once they make it better and better, once the lever's done, I go to business 2. All right, what's the next thing I need to create that will improve this? And what will improve that? And that's the basic way you do that. Until it can basically run on its own, don't stop focusing on that one. Otherwise, it'll fall apart and you've wasted your time, and then you're grasping at straws all day trying to catch up to your own machine. But you never want to be the case. You want to stay on top of it. You don't want to chase it. And that's the basic way you got to do it. If I got more ingrained, it would be too different for each project. But that's the basic mentality you need to do.
Yeah, love it, dude. Now, do you ever get to a point where when you have multiple businesses where it's like, well, what if you just had one and gave everything one focus? Because I got to a point, I think before we hit the record button, I told you in 2018 where I exited from 5 companies, and they're all strategic partnerships. What I did is I created a team of, we run the back end. So even though it was, we got to the point where we had over 10 companies, we were doing the same thing for each one. And I was like, we could have 100 of these. What I didn't anticipate is the different avatar for each business. And then you also have the, strong personality of each different business partner, each business. And so something had to give, and maybe I didn't have the right system and process going into it to manage it. But anyway, with having multiple though, do you ever get to the point of, man, if I just had one, or does it work because they kind of each build off of each other?
So I gave you more of the tactical answer before of, this is what I'm doing this week, and this is why I do it that way. So each company, as you're seeing, because I see real estate as a conveyor belt, connects to the other. So in a way, while I don't even know how many companies I technically have. 5 or 6. I see it as one. And I just see each company as a different stage of the factory assembly line. And in a way, you can do this with one company. So if you have one company, one focus, well, what is that focus? What are you really breaking down? At the end of the day, okay, you're doing one business, right? What is the thing you're doing? I can guarantee every single thing you do, there's multiple components to that the customer, client, whatever, is experiencing. And how can you be part of all of those experiences? Now, you might want to, let's say it's an ice cream store, and you just want to specialize on the best ice cream because you don't care about everything else. Fine. Let's put 80% of our time into making the best ice cream ever. But the other 20%, you just can't ignore because people don't want your shop to look bad. If your shop is in the middle of an alleyway that's scary, no one's going to come. and stuff like this. But so just find the things that also affect your specialization the most. So you love ice cream, but people got to know about the ice cream. So you've got to have the marketing for it. But what is it going to be? Is it people on the street? Is that what's probably going to get you the furthest? Or is it going to be online marketing, this, that, the other? You got to do your own research. But essentially, get the most bang out of your buck and your time if you're really going to specialize. What are those few things outside of your specialization that really affect you before the customer shows up, when the customer shows up, when the customer leaves? What matters the most? Because like, okay, they found you anyway. Turns out marketing doesn't matter about ice cream. Now everything that matters is how they feel about the ice cream afterward, because now they feel fat, right? So they're never coming back. Well, that turns out to be the thing that's destroying you the most. Well, okay, let's make the best low-fat ice cream ever. There, now they'll come back. Because you thought about that. Or you made your marketing to be like, don't worry, it's low-fat. And you made the best marketing to make people feel good about it. In fact, now it's just as good as juicing broccoli and kale. And you emphasize that as well, because that's part of the customer experience. Because while you specialize in one thing, you never get to truly exclude yourself from the customer's entire span of that deal. You never can. Even if you try to, they're still going to experience it with or without you. So it might as well be with you. And if you want to, and then you just find those main things again that really emphasize your point and keep the thing positive, keeps them coming back and maximizing how much they spend with you. Why not get 2 scoops of ice cream, right? Find that thing that's going to give you the most bang for your buck and keep them as happy as possible.
Yeah, love it, dude. So, early when we first started the podcast earlier on, that you mentioned that, you're not somebody that does specialize, which is the opposite of what you hear from so many people in the industry of like the riches are in the niches and they stay in their lane. Do you think that you've been kind of the exception to the rule of what most people follow, because though you do specialize in a way of like you got your superpower is developing efficient processes and systems, which makes all these things work. But that really is your specialty. That's really your superpower that makes, more of these general areas work. Would you say that's a true statement?
Yeah, that is a big part of it. Like, in a way, yeah, I'm the antithesis of what all these people are saying. And it's really because of that is because of my own personal strengths. As I've always been saying, it's like, I'm not the charismatic guy. I'm never going to make 6 figures being the charismatic guy. I'm charismatic enough, but I'm not king. But where am I king? Where's the thing that's going to give me the real alpha of what I'm trying to do? So yeah, no matter what I did, I specialized in the efficiency part of the business, because basically the one thing that's true in business is there's always going to be a process. There's always going to be efficiency. There's always going to be this. There's always going to be that. And maybe you find the thing that's in every company too. Because yeah, in every company, there's the talking. Okay, how do you do that the best? Or the networking or making people feel good. If you can do that part of the experience exceptionally well, then you can win in it. And then you just spread it across all the other businesses and you sub out the parts you're weak at. Anyone can do this with any personality type. This just happened to be mine. That's why I'm saying this is totally replicable, but it will never look like what I do, because you are different and you are good and bad at different things. And the things that also make you happy and sad are different things, because you need to align the things that make you happy with the things that you are good at. And I end up really enjoying those really efficient things. I loved reading that nerdy little Atomic Habits book and then going and doing that. Other people just love talking and this and that and the other. You got to find that thing that basically spans whatever you do. And once you find that thing, you'll find it doesn't really matter what you're doing, because that's what you end up focusing on all the time.
Yep. Love it, dude. So then now today, you've got your iBuyer company. Where's most of your energy, I guess, time and business being had today, now that you've got such an established business? Yeah.
So the nice part of having established businesses is I have momentum. So even if I'm not really doing anything, certain parts are growing. Like I have leads coming in for homes every day that I will either buy or broker for whoever. I have leads coming in every day for property management or apartment complexes, homes, whatever. And all that stuff's coming in. And that's partially by design of the systems I make to keep the marketing and the brand and the reputation going. So where I end up putting my time is basically the next biggest thing, which for me right now is real estate equity fund and also a form of iBuying. Because again, I'm combining things that to me are the same. So what's a real estate equity fund? A lot of people might not really know what it is. They might hear it getting thrown around a lot. Essentially, a real estate equity fund is, it's a lot like the story I told before, where you get an apartment complex and you fix it up, you buy it, you fix it up, you lease it out, and you manage it, and you sell it years down the road with a bunch of partners. It's just a different capital structure. With different partnership agreements and memorandums and things like that. A real estate equity fund has to be created through the SEC through Reg D. And essentially what it does is it, like this one, mine, it'll buy single family homes. It'll fix them up a little bit and it will lease it up, manage it, keep it up and running for 5 to 7 years and then sell it. And the reason why I'm doing that is because that's essentially what we do anyway for our clients or my partners when we do one-off deals. This essentially just makes the system more efficient because now I don't have to go out and raise money for every single individual deal, which is what I've been doing. We just do an investment period. We do all the money up front because, I've been doing this for years and everything's good. And I raise, 7, 10, 15, 20 million bucks. And then I make a system for that and we keep buying homes with that and then we hold them. And so it's just a more efficient program of what I've been doing. So see how I keep building on what I was doing before? I keep building on the foundation of what I have. Here's the infrastructure. Here's my personnel. Here's my expertise. How do we make this better? How do we make this bigger? So that's where most of the time is going, which is taking the foundation and making it a little bit better and bigger. It's like building a cake. And so that's a big part of it. Another thing I'm doing is I'm growing the channel. I had a YouTube channel a little bit back. I lost sight of it. I was getting way too busy. And so kind of like you, I was just getting way too busy. I couldn't do all this. And so I was like, okay, I need to get more efficient. I need to get on these podcasts. I need to get on channels. I need to make these videos. I got to get a person for that and make this easier. So why am I doing the channel though? Well, it's help grow my brand in every single department I have, because people interested in real estate, investing, well, maybe they'll give me a ring for my specific fun thing I'm doing, or maybe they just want property management. Okay, great. Or maybe they just have a giant rehab. Okay, great. How about that? See how everything I do helps the other, and it all keeps growing. And I just have a different way of focusing on growing the same base.
Love it, man. Well, real quick though, before I forget to ask, because I had a few more questions for you though. Now that you're getting refocused on the channel, and it's not like the channel still doesn't exist out there. There's still a ton of great content that you have out there that people can tap into now. And you're just getting ready to invigorate it. Where do people go that are watching this that want to go learn more? Because I mean, dude, like at the end of the day, all real estate agents want to become their own client and get into real estate investing, right? So with what you're doing and to be able to learn from you and all this amazing knowledge that you have, like, where do we go check out the show? What's it called? Where do we go? You mentioned YouTube, but is it just your name or?
Yeah, generally if you type in my name and then type in my brokerage, Fort Lowell, Lowell, I'll pop up on YouTube. I also will do things a little bit. I'm growing the Instagram. It's at BrokerBob1, because a lot of people refer to me as Broker Bob because I'm a real estate broker. And we'll do stuff like that. So either Broker Bob, Bob Collopy, Collopy. YouTube and Instagram are the main ways that I pop up. And that's the main way you can learn stuff, because I go into how I do everything. None of it's a secret to me. So, yeah.
Awesome. Well, and those that are watching, listen, wherever you're at, it doesn't matter what platform that you're on, listening or watching this, we're going to have all of those links below, all of Bob's handles, all those links to make it super easy and so you can connect with them. So, With this private equity fund to go out there and buy all the single family attached property, dude, just in recent history has been like, and I call it smart money. When you have Blackstone and, they would enter the single family detached market after a crash, like when REO bottomed out, right? Was when they would, it's like back in, 2010, when they're here in Phoenix buying 500 properties a month. And, but now it's like HUD isn't even going to market with their homes. They just package them up and sell to Blackstone, even though we're at a peak, like a seller's market. And from at least the research that I've done, I've never seen another time where all these funds have bought up and swallowed up the amount of single family attached property the way they are at really, in this second longest bull market in recorded history. And there's a lot of different camps on it, right? I heard recently that because we're still so underbuilt as a country with population growth, it'll take 30 to 40 years to catch rooftops up with population growth. So there's going to be such a shortage. So is it banking on the future, or why are we seeing so many investors going from multifamily now into single family? And obviously I'm guessing that, you've got this methodically planned out now that you're jumping in there.
Few answers. So why is all this happening? Why is it happening now? How is there so much money? So the basic answer in general before the multifamily switchers is the stock market, which is also something I participate in daily, is the yields are so low. I mean, you look at these treasury bonds and they're below inflation. And we have the inverted yield curve and everything for the 2-year compared to the 10. And basically there's nowhere that these very large, it's usually groups, it's usually not just individuals, can park their money and know that there's going to be at least some appreciation, because a lot of the times it's low risk money, because it's usually held by like an insurance company or a wealth fund, could be a sovereign wealth fund, a family office or something like that. They usually don't want to go into higher risk stuff because they already have so much money. They just don't want to lose it. And they want to keep it growing a little bit so they can just live off the interest. Or if it's a company, like an insurance company, they make that spread. That's how they get paid, but they want to make sure they're going to get paid and have payroll for everyone and not lose money for like the teachers union. So they used to be able to park their money in all these bonds because they'd still get 4, 5, 6% back on their investment, even though it was super low risk. But that's not true anymore. So basically, you see all these people moving into real estate because when you buy a lot of single family homes, it starts to operate like a multifamily because you have so many units all over the place. And you might not just be in one state. So you have a diversified portfolio of hundreds, if not thousands, if not tens of thousands of homes. And you have that rent check coming in every month. Because even when we were at our darkest times in 2008, 2009, people still paid the rent. And the rents didn't go down that much. I think in Phoenix, the rents didn't go much below $50, $75 for houses. I think apartments were hit a little bit more. But generally, the money was still coming in for the rentals because they were middle America homes and everything. So they still had the jobs. They're still able to pay the rent. They had to, tighten their belts and everything, but the rent check came in. And that's really good because groups like mine will still get, the lower end is a 5 cap. The better end is a 6, 6.5, maybe 7. You could hit 8. And so it's like, well, the money's coming in anyway. And also the homes do generally appreciate still because, yes, there is a bit of a housing shortage, which I can get into later. So the home should still appreciate. So our internal rate of return will still be minimum 11%, could be 13%. Depending on how you buy, what you're doing, and all the criteria. So many criteria. And so that makes sense. So that's why you have all this money coming that used to hang out in bonds coming to real estate, because it's almost like a bond. It's not. But at the risk levels, it's tolerable to them is the best answer. And multifamily people. Yeah, there are a lot of multifamily people going into single family kind of like me, because I saw myself as a multifamily guy. Like, this switch was weird to me for a long time, because I was like, multifamily's better because of, you get your economies of scale, you get this and you get that, you get cheaper labor, you get cheaper turnovers, you get cheaper everything, cheaper marketing. Rents are relatively competitive for the square footage. But multifamily is so hot right now that the returns are actually a lot of the time lower than the houses. Especially this year, because we have single family homes where we up the rent, and they're normal homes, 3-bedroom, 2-bath, middle America homes, $200,000 home to $250,000 home, rent bumps of $200. That's a big bump when the rent was $1,200. That's a huge bump. It's over 10% bump. It's like a 15, 18, 17, whatever. And the prices of the homes were the same. So actually, that's all increase in cap rate for us. So that's also why the money's flooding in. And because of the multifamily, the rent bump that hit single family more than multifamily, and then the bonds. And yeah, those are the big reasons that people are going into it. And people are seeing that other people made a lot of money on this. So it's a proven market. Before it was like, what is this? Now it's like, oh yeah, they've been doing that forever and it's been working out.
Yep. Yeah, love it, dude. So then, you got a lot of people that are also have a lot of fear right now about jumping in. Let's just say it's, your real estate agent that wants to start investing themselves and they're buying maybe 1-2 properties a year, but maybe the 20 years they've been in this market and their experience is like, what goes up must come down. And, it's like almost daily that I get asked, like, when's the next crash coming? And I'm like, I don't know. Like, who knows? Like, when it happens, if and when it happens, it just happens and we adapt and shift. And, but you don't seem to have the fear with the adjustment. And does that come down to, because I hear just two big opposite camps, from economists, one that's like middle-class incomes dropping at record rates and with all the debt that's up, like we're just a house of cards. But then you have the other camp of with the population growth and, that is like, at least when it comes to real estate, with how loans are being written, that they just feel like real estate's the most solid place to be, right? And I'm guessing with you doing this the way that you do, and you have some confidence there, but what would you advise to those that are listening to this that want to get investing right now, but are operating from a fear base and they're trying to time out the market?
Right. So the first thing that people need to understand, because this was my big whoa, is how I'd still put myself in the realm of normal people when it comes to investment. And that is different from these mega groups. How they view money and what they need from it is very different. And so what works for an insurance group who really just wants that rent check coming in, and they have tons of it and they can take that rate of return, and they're going to keep that money with me for 3, 5, 7 years, basically no matter what. That is a different story than someone who's got to get a much bigger spread. It must appreciate now because I might only hold it a year or two. I don't know. I don't have that kind of cushion. It's different. In regards to and so you have to understand those are two different camps. And you have to advise them accordingly. So for the average Joe, more like us, because the people who are the mega 10 million, 100 million people, we're all average Joes to them if we're not them, is how we see it is, yeah, I'm investing a lot of my own money into my fund because I also don't need a lot of it right now because I bank everything. I save about 90% of what I make. And so I'm putting a big push into it because I know it'll be good growth. And I know for those larger groups, they'll get their rate of return, even if the houses go down, because in Phoenix, the growth rate is still really good and they're not able to keep up with making new homes because there's a huge labor shortage, and there has been for a long time. So that's not going to get fixed overnight at all. So no matter what, because we are one of the fastest growing cities in the nation, and because we have a housing shortage, and we have on the supply side a long time, like our supply to demand is if you were to double the amount of supply in Phoenix, we still wouldn't necessarily have an equal market. It's still a crazy seller's market. So even if the market went down, okay, now we have a balanced economy. Whoa, no. So I think the downside is relatively muted for Phoenix, but everyone needs to know their own city first off. And if you want to get in now, there's a lot of ways that it can make sense. One thing that I was underwriting for fun, because I was like, oh, well, maybe I'll put a piece of my money into this as well, is like Airbnbs. The rate of return I was calculating on those was so high, even if I had it filled only 50% of the time, and I made a profit of $100 a night because I was keeping it on the lower end because they were normally 120, 130, at least here. I was still making a really good rate of return, even if I made it 25, 30%. Because it's all about what's your break-even point for the smaller investor. Like if you're going to be highly leveraged with a high-interest loan, with all this stuff, and basically everything in your underwriting of this property is optimistic, and that's the only way you're really going to make your money, don't do it.
Yeah.
You always underwrite for the recession. Do it. Is this deal still work in a recession? Okay, then do it. You put your worst case scenario in there, it can only go up from your recession number. Now, give a good recession number and do your best to get a recession number, because while we might not understand what the Dow Jones is doing every day, people can generally see, if they're experienced, what the market will dip down to. Look at the crash in 07, 08. And if the home values went down 20%, then make your home value go down 20%. If rentals went down 10%, make it go down 10%. Make it go down 15%, whatever your risk threshold is. And then if you're still getting that rate of return, well, then there you go. It really is that simple, at least on that end, assuming that you can be as right as possible. Just add your fudge factor as big as you want until you feel like you'd be about right. The other part was, what was it? The recession itself would be different, I think, in this market, because I read about the market. I'm averaging at least 3 hours a day now on the market. And what I've been seeing is, yeah, there has been a lot of discipline in single family home loans. There's been a lot more discipline in that. They've started to get a little cute with down payment assistance programs, which I actually don't salute. I don't think they're a great idea because the default rate on those is really high, but they're still like less than 1% or so, at least from what I saw in my data set. So it wasn't going to end us. The loans that might hurt the market big time are actually business loans. America is super leveraged business loans. We are overly leveraged. If you look at the amount of debt American businesses have right now, it would freak you out. It's actually well above 07. And there is a reason for this, because everything changes. Just because the loan amount is like double doesn't mean it's twice as bad. The reason why it got so high, one main reason, because there's always 1,000 reasons. The main reason that I can find is the interest rates are so low for everything. And there has been they've been relatively easy to get. So before, when it was easy for a homeowner to get it, now it's easier for business owners to get it. And that's all been well and good because everyone's been growing. Unemployment rate has gone down. We've had very small upticks in the average pay people get. Because the unemployment rate is so low, we're starting to finally get little bump ups in average pay. So that means consumer spending, which has been good, is still strong, and it keeps going up. So long as everyone's making money, there's no problems. The big thing that I think might kill us is 2/3 of the American economy is consumer spending. Our GDP is consumer spending. And once consumers start to really freak out, they were actually a little rattled last month, but once they really freak out and start saving way more, or at least not spending in the market, that's when you might start seeing the drop, and that's when you might start seeing much higher default rates on those business loans. And that's when you'll start seeing tumbles. And we've actually had that the past 3-4 days in October. If you all go up and it's still October, go look at it. It's kind of crazy what's been going on. No, my girlfriend's cat. So look at that. Now, in my opinion, because it's based in business loans and not home loans, real estate for us, the home guys and everything, won't be affected as much because we aren't the direct thing that's destroying the market. We'll always be affected because everything affects the other, because I have the mentality of all things affect the other. But we won't be the direct fall. So I don't think it would be quite as bad. But
yeah, love it, man. Love it. No, it's good insight, dude. It's awesome, man. So, no, we're going long on time here. So just one last question for you, man. Knowing everything that you know now, that you've learned through all these years of experience of entrepreneurship and of all these different facets in real estate, if you could go back and have a conversation with your younger self, like right maybe when you found that first deal, right when you graduated college and entered this venture, and give yourself 2 pieces of advice that you feel would have just really fast forwarded your trajectory to success, what would those 2 pieces of advice look like knowing everything you know now?
What were my biggest things? The one was make like a business process or system like the lever thing autonomous before you go to the next thing. Because otherwise you end up chasing your own company every day and you lose a lot of focus doing that. Because you might think it might just ruin a day, but you'll see that it ripples into your week and maybe even your month. Always keep most of your focus on that one lever you're trying to get as autonomous as you can. And then the other thing is, what is the other thing? I mean, really, it's those next level personal habits and how that affects your environment and your mentality. It really is bigger than you want to admit. Like if you have a cluttered house or a cluttered inbox or a cluttered CRM, that is messing you up. Because let's say you're super juiced on this thing you want to make today. You're super juiced, but everything's kind of messed up. Like this wasn't there, or this is kind of messed up. You're ruining the time to get into it. You're ruining the optimal hour or two, because you only get an hour or two where you're really 100%. You're ruining it. And you're just turning it into fixing junk. And that's where you're going to get 3/4 of your productivity is actually this 2-hour super focus zone. You have to have that super focus zone and run with it as far as you can. That's what really makes the difference on finishing that lever.
Yeah, love it, man. Powerful stuff. And those watching and listening, I know we end every podcast for this, but information without implementation is truly just the start of delusion. Information isn't power. It's taking that information and taking action on it, massive action on it, that gives you the power to create the life that you know you want and deserve. And Bob shared so many amazing pieces of advice with you guys today. Take something that you learn, go out there and take immediate action on it. So again, you can go out there and create the life that you know you want and deserve. And again, below wherever you're watching and listening, I'm gonna have all the links to connect with Bob, check out his show on YouTube, connect with him on social media. So make sure to take action and do that. And Bob, man, I know you're traveling. And you're a busy man. I truly appreciate you taking time. I appreciate it here, man. This has been epic, dude. This has been awesome.
Yeah, thank you. I've enjoyed it.
Yeah, 100%, my friend. All right, you guys. Well, thank you for watching and listening. We'll see you next time.
Have a good one.